Hi, this is Jack from Alpha Charts with a state of the market video. Today is what's today? November 27th, 2021. Happy Thanksgiving to everybody if you celebrate. Hope it was great. Let's talk some markets. So the market hasn't been great. So let's get into it. Before we get started, if you like these videos, like and subscribe. As usual, if you haven't already, why not? Just do it. Thank you very much. Appreciate it. It does help me out. Also, I'm on Twitter at AlphaCharts365. Posting stuff all the time. So again, like and subscribe to my YouTube. Follow me on Twitter. Thank you very much. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I could hold positions in some of the equities mentioned. Know your retirement and risk tolerance. Okay. Don't be stupid. All right, here we go. Big time, down day on Friday, half day in the markets, and on the SPX, and not a good look, right? Not a good look. It was only half a day. A lot of traders were probably not at their desks. That doesn't matter. Only price pays. So where could things go to, right? I think let's go to the weekly chart here, just for fun. And if you see on the weekly chart, so this pullback isn't horrible yet. It was a lighter volume week, right? And it's still holding this area right here, which I think is probably the next, area of potential support. After that, probably, down here. But right here, I think this is what I'm watching. This 40, 530-ish. We'll go back to a daily, be able to see that a little better. This 40, 540-ish area. And from there, it is only 1.25% or so away. What I don't like is that good chance that these are going to cross in a bearish manner, and that creates just some more downward pressure on price action. But again, this is the area, this 45.25-ish area that I'm watching. So a lot of damage has already been done, right? I mean, we're going from 3.3% on the SPX. All right, not crazy, but it has felt, especially if you're in growth stocks, it has been really, really bad. So let's look at the RSP, because I think that gives us a better picture of what's going on. And yeah, see, there you go. Huge volume, broad-based sell-off. That's what everyone was feeling, and it's a big deal. And a gap down below this area that I had put in here that could potentially be support, and that's a problem. You also have this bearish crossover on equal weight, which again isn't so good either. So then we back in play is this 152 area. I think 152 now has to hold for the bull thesis to be intact. From here to here, that's another, we'll call it 3% lower, roughly. So that's where I think, I think that there could be more, and it probably is more downside left in this market. And then we're back in this area, what does here, no one knows, right? We don't know. But this is the area that I'm going to be watching. This is the area that I'm going to be watching to see if support holds or not. If it gets down there, right? No guarantees it's going to get down there either. But it all looks it all looks like that's an area that could be important, right? Again, and this type of gap right here, and this kind of movement and closing in the bottom end of the range on the RSP equal weight, I think holds a lot of information. This is broad-based emotional sell-off, and we'll look at sentiment later and see how far we are on the sentiment gauge later in the put call ratio. But this is definitely momentum to that downside. So definitely watch for relative strength, but this says, in my opinion, more sellings do. Now here's the other piece. We are now kind of extended from these moving averages to the downside, just like we were extended to the upside here. So low volume days back into the moving average in this area for maybe beginning next week. Is that a possibility? Absolutely. but I believe they are guilty until proven innocent because, again, it's just extended from the moving averages. A lot of things would happen. My guess would be you're going to get a low volume pullback right into 157, 158, and then moving averages will catch up, and then maybe another leg down to this 152. Kind of like down, up. Sorry, it's kind of messy now. Down, up, and then down. That is one possibility, right? And I'm just gonna get rid of these old arrows, right? So that's kind of what I'm thinking, is the higher probability action right here. And to me, that makes a lot of sense. Do I know if that's gonna happen? No idea, but that is kind of what I'm watching for. We'll see. I'll leave these arrows in here just for now. Let's keep moving though. Spend enough time on that. Qs. Again, Qs got hit pretty rough from top to bottom. You're looking at almost 5%. And if it pulled all the way back, roughly, only 6.5% or so. So a 6.5 pullback within the context of an uptrend is normal. Do I think that's going to happen, or do I think this is going to hold? Again, no idea. But again, it was a broad-based sell-off, a lot of distribution coming in here. Looking at the equal weight, very similar to the RSP, and if you notice, worse off. So that just tells you that Amazons and the Apples are holding up the index, and the equal weight is showing a lot more damage going on here. Again, but already below this important area where the cap weighted really wasn't. So that tells you the damage is definitely more broad based and is more concerning without a doubt. You almost have that bearish cross right here, which probably will happen on Monday. And yeah, things are looking pretty rough. Is there a chance that we get, again, similar to the SPX, like a low volume pullback, let the moving averages catch up, and then start another leg down? Yeah, I mean, that's probably the more likely scenario, right? Get people thinking that it's over, and then one more flush down. Does it have to happen? Absolutely not. But I think, there's a lot of space here, and, not until you get into this area do I see a lot of potential support. This is an area that I think maybe could hold something. If not, then I think definitely the area below has a high probability, but that'd be a much bigger, deeper correction, right? If we go from here to here, that's another 3%. If we go from here to here, it's another 6%. It's double it. So anyway, looking at the equal weight Qs, again, much more damage, much more broad-based damage, which means I don't think it's going to be as easily to be over as maybe a low volume pullback into the moving averages may make it feel like, maybe a couple of good days. And if you follow FinTwit or whatever, you're going to start seeing people that, all the dip buyers boasting that they, caught the bottom or whatever. Catching the bottom's very, very hard. Again, these are all just ideas of where things could potentially go. Sure, this could be the bottom, but again, I don't think it is, just because of the magnitude of the sell-off and the momentum to the downside. Definitely guilty until proven innocent. Moving on to the IWM. And man, that is just one ugly chart. It already has the bearish cross back in this range. I mean, back here, me, I was super bullish back here. I was even bullish into here. Once we got back below here, right, and back below the moving averages, and they started to turn and curl down, this is where things changed for me. And this is a 3.77% down day. Humongous volume, man. So now, we're good chance that we're going to be retesting this 2111, 2110, 2010, 211, 210 area on the index. Yeah, that's ugly. That's really ugly. Mid caps, very similar. is holding right now, actually very similar, but holding up better than small caps because it's above the breakout still. The other thing that's gonna last, I think we'll probably get a bounce here like the other charts. And there's a chance it's gonna break and retest this bottom too. Again, no one knows the future. Again, holding up better in the fact that it's above the breakout still, but it looks terrible. All right, let's go look and start digging some deeper. Okay, just for fun, IWO. Yeah, IWO again. It's crossover way back when, and yeah, I think definitely back in the range, and just looks pretty rough. Financials. Now, financials had a terrible day too, which is kind of interesting because I guess it makes sense because it's a big piece of the IWM, but it did hold the breakout so far. And let's just look at interest rates. I'm going to jump to TNX. All right, so interest rates did back off a little bit on Friday, and 10%, a lot of it. So people are rushing the bonds. That makes sense. All right, so banks sold off, probably interest rate driven. So we'll see where that leads to. But yeah, if they can't hold this area, banks are going to roll over. Again, we don't need banks to lead, but they probably should be participating to the upside. And right now it has a bearish tilt to it. SMH holding up really nice, right? Again, this is a pretty steep right here. So it can't continue. So now it's kind of basing for now, at least. Still above the 23-day EMA. So SMH, the most important subsector, not getting totally destroyed, right? 3% down day, but still above its moving averages, at least some of the medium term to longer term moving averages. So that's a positive, right? We'll take it. It's not like uber bullish right now, but it's a positive. So okay, we got that. Let's look at lumber. All right, lumber, big time drop. It started to look very constructive here, but it rolled back over below its moving averages, still just in a range, so no real signal. Again, if it breaks this 83.75 area, or even $83, I think that bodes really, really poorly for the next 6 months in the market. We're not there yet, but not looking great. Only in a range, so no signal. Now, concerning was the bond ratios. Switch this off and let's get rid of some of this junk. And that is the concerning look, right? We always talk about what's the concerning look in bond ratios. And I use this as a guide, right? Well, this looks concerning. And we've had little spikes before, right? We've seen it before, but that's concerning. If it gets above 1.52, and that's been my line in the sand for a long time, that's a problem. That's a big problem. That's more of a systemic risk, in my opinion. Again, we don't want things to look like this. It's a start. It's not not the end all be all yet, but another big push up that would make me extremely cautious. So I think this is one of the charts to be watching. If bonds are telling us and they're starting to widen by the bond spreads between government high yield bonds, if that spread is widening, that's a problem. All right, so watch that for sure. VIX, as expected, spiking, looks pretty ugly, back at 28.61. Again, egregious, no, but the magnitude of the move is egregious. That's a problem, right? Vixen, same thing. And we've had one, this is nothing, all week long it's been spiking. Looks pretty rough right there too. That's the VIX for the Qs, NASDAQ. Put call ratio. So where's sentiment in all of this, right? Let's look at the put call ratio, and you'll see the spike, but man, looks like the dip buyers are still hanging in there. So no signal here, moving in the right direction, but not not overly bearish yet, right? So, which makes me think that it could be another flush, right? I mean, it's got to get to, closer to parity, one, right? And if it gets into this area, right, above one, that is more excessive bearishness. And up here, again, it's arbitrary. 1.4, it's what I put in there, but you could use 1.3 if you want to, or something like that. That would be extreme bearishness. That would be areas where you say, okay, everyone's on the one side of the boat, and you may want to take the other side of the trade. We're not seeing it yet. I think we need some more momentum to the downside to get into this area. We'll love to see a sharp move like this, right? That was, February 25th, very close to the bottom, right? And then that would be a potential an area to start buying dips and whatever else you choose or may not choose to do. But again, no extreme measurement in sentiment, in my opinion, at least. Moving on to value line geometric index, it's not as bad as IWM, but it is back in the range. So we have that, and again, it's a false breakout potentially. And if you look on the weekly, it'll look a little bit worse, but back in a range basically. But as a measure of breadth, holding up better than some, so that was good, right? Holding up better than some, but looking at the percent of stocks above the 50-day moving average, all right, so now it's at 37.66. So again, I guess, yes, we're making higher lows if this holds, but that's a pretty good magnitude down. But we saw it here though before, right? And we did see it here too. So maybe this is some sort of capitulatory bottom, and we're gonna make a higher low and things turn around here. That's a possibility. But if we continue lower, watch for this 22%. That's a place where in the past the market has found some support when 22% of stocks are above their 50-day moving average. And if you lose 22, then the flush all the way down into single digits. That's likely too. All right, so just if you do like this, you can see, but again, it's a large flush. You see a pretty strong move down. No reason to think this is the bottom yet, in my opinion. We'll find out next week for sure. Definitely caution in this market. So in this market, are people rushing into gold? Nope. We had this breakout here, and I thought gold would be, people were going to start rushing the gold, and it was going to finish off this, big pattern, and everything was looking really good. And then it rolls back over, freaking gold. So people aren't rushing into gold. Again, it's not showing, this reason to, this reason to safe haven. Let's look at TLT just by itself. Good. Yeah. So again, some rush into TLT a little bit, but nothing crazy. I mean, it was more back here in February. So we'll see what happens. And always we got to look at Bitcoin. So are they correlated to the market? Not correlated to the market? Looks more correlated than not correlated, right? So, what are people doing with Bitcoin? I think this is the area to hold, is 52, 53. It's a lot of eyes on this level. And it looks like the dip buyers are, after this flush, 8.9% right here yesterday. Looks like the buyers are starting to step up. We'll see if this area holds. This weekend, if we see a nice bounce in Bitcoin, we'll see what happens when it meets these moving averages, right? Because that's kind of what I'm talking about with the indexes. As we get the flush down, it meets the moving averages, comes in, meets it, gets rejected. Eventually, it's going to have to start to create some kind of bottom. Maybe it'll be here. I don't know. And you have to remember, Bitcoin and all cryptocurrencies never sleeps. It's 24/7, 365. So one day in Bitcoin or any crypto life is 3 days in the market roughly. So 1 bar is equal to 3 days in a stock sense. And I got that from actually JC Perez at All Star Charts. He brought that up a few weeks ago at some podcast I was watching. And you know what? It makes a lot of sense. Market never sleeps. So that's interesting. Anyway, so we'll see if we could carve out a bottom here, because right now it looks very correlated to the market. False breakout, rollover, so on and so forth. All right. So let's sum up my thoughts looking at the equal weight Qs. Actually, let's do RSP. Here's RSP. Guilty until proven innocent, man. Play defense. If you're going to try a buy, I would try it very, very small and only on what you think is going to be the leader coming out of this. Good chance you're going to get chopped up. Good chance you're going to lose money. I think that there has to be maybe a small pullback, and then one more flush, hopefully getting sentiment really, really, really bearish. And maybe, just maybe, we can go ahead and find a bottom someplace in here. Then you'll have obviously the head and shoulder tops people coming out, right? And that's fine. That's fine. And maybe it will be a head and shoulder tops. I don't know. I'm just looking at this pattern right here. If you get some support down here, that would be, a spot for people to say that, maybe. But as of right now, again, a low volume pullback into the moving averages, then a rollback over is the more likely scenario. And just watch market. It's okay to go fishing or sit on your hands or just take notes of what's going on. Look for the outperformance. What's showing up in your scans, or you check out my scans on Twitter. Alpha Charts 365. I post them every night. Has been really good. When the scans start showing more names popping up, that's a sign that maybe the market's starting to heal a little bit. I found that in the past, that as my scans start showing more and more names, the market is healing and maybe under the surface. All right. Well, good luck this week. Hope you all stay safe out there. Remember, save your mental capital, save your physical capital. The market will come back eventually. And so don't get too chopped up with this. All right. Y'all take care. Have a great week.